What's up, YouTube family? My name is Adil. I'm an investor, entrepreneur, currently running a full-time short-term rental business with 30 plus properties. For those of you who don't know what short-term rentals are, you must have heard something called Airbnb. And it's funny that someone just recently asked me, what does the channel The Traveling Host stand for? Well, me and my wife, we're full-time hosts, obviously, because we have more than 30 properties on Airbnb. And we do this while traveling almost full-time, which we can't do right now. Well, today what we're discussing is where should you be investing in 2020? Real estate, Airbnb, what about stocks? That seems to be the hot topic right now. And what about crypto? Where's all my Bitcoin holders at? Now, this is not financial advice, guys. This is just a guy speaking into the camera who knows a thing or two because I've been investing since 2008. Yep, that's right, when the last recession hit. So let's jump in. Let's start off with real estate. That's my passion. That's my go-to. I'll tell you an interesting story. My first property was bought in 2008, back when the last recession was. Usually there's a recession cycle of about 7 to 9 to 11 years, anywhere between 7 and 11 years. So back in 2008, I remember I was a young guy who had just saved up funds to purchase his first car. I think at that time I had about $15,000 saved up, but my father actually introduced me the first time to investments. He said, why don't you actually put this towards a down payment of a real estate property, and maybe you'll generate some passive cash flow from that and you can use that towards your car. Now, what that means is, I'll break that down for you. At the time in 2008, properties were obviously a lot cheaper than what they are today in 2020. Back in the day, I remember I bought a property which was a little further out in a suburban city called Ajax. The property price at that time was $238,000. I initially invested just 5% down. For all first-time home buyers, you can enter the market with just 5% down. I know a lot of people prefer saving the 20%. It just slows down your initial foot in the door into the real estate market, because at 20% of a $500,000 property today is $100,000, but 5% of that property is just $25,000. Now, at the time, I was working full-time. I had an income of, I believe, of something around $32,000, which was still enough to be approved, and interest rates were very, very low, which they are today as well. If you guys have been paying attention, there's been some significant interest rate cuts recently. So jumping back into my story, in 2008, I purchased that first property with just about $15,000 down, with including closing costs, everything all in. And I started putting the property on rent. It had a separate basement, which I could furnish. And I, at that point, started student rooming the space. Now that property, my first property, allowed me to have a positive cash flow of $800 per month. Now, $800 passive cash flow is not bad at all. If your regular full-time income, let's say, is $5,000, that's what you need to comfortably live, that you only need about maybe 6 properties to replace that passive income. Now, obviously, 6 properties purchasing is not super easy, especially the first one you may be able to purchase at 5%. The remaining of the properties you need to still put down at least 20 to 25%. However, getting that initial foot into the door allows you to start generating actual wealth. Now, passive cash flow aside, you're also paying down your mortgage. I'll do some math for you real quick up here. This is the amount that I'm able to pay off within the 5-year time period. And any type of appreciation that property is seeing is just on top of that. This is how I started. Initially purchased my first property with just $15,000 in. And I think this one, within the 5-year term, did pretty well for me. Now let's talk about real estate in 2020. Recently, properties in most of the urban cities have been priced to perfection. I'm currently in the city of Toronto. Prices in the past 3 to 4 years have seen a very, very large increase. If I'm to give you an example, that property that I initially purchased at $238,000, I sold a couple years later at the price of $378,000. Now, it's funny, I was just looking at that exact same property just about 5 days ago, and it's currently listed at $599,000. Yes, that's right, guys, $5.99. That's the power of holding real estate over a longer duration. Now, of course, I sold that property, but I purchased numerous properties from that. Usually, another thing that you can do is you can refinance. If you're not willing to sell, you can pull some of those funds out and trying to diversify or purchase another property from that. Now, as we're speaking in 2020, going back to my point, properties in a lot of urban cities were priced to perfection. What this means is the property that I purchased in 2008 allowed me to be cash flow positive. Recently, people have been investing in properties that make no cash flow sense. To give you an example, a studio in downtown Toronto ranges right now between anywhere $500,000 to $550,000. After your condo fees, your mortgage payment, your property tax, your utility bills, your insurance, all the costs that are associated with the property, you're gonna probably be about $2,600 to $2,800 overall on that same studio. However, when you're renting that pre-pandemic, you could rent it for maybe about $2,000 to $2,100. Right now, in the pandemic, obviously the rental rates are a little lower. Now, even pre-pandemic prices, you're priced to perfection or even worse because you're not able to cover your costs with the long-term rental rates at all. Now, a good cash flow investment will always be a property that whatever rental procedure you're using, whether it's multifamily, whether you're renting the upstairs portion and the basement separately, whether you're rooming it out, whatever your strategy is for that property, it should be cash flow positive. If a property is not cash flow positive, it most likely does not make good investment sense. Now, going back to this example of a property or a studio that costs $500,000, in this example, you would have been in a deficit of anywhere between $500 to $700 per month. This is not a good strategy for an investment property. Of course, the thing that we're missing out here is the appreciation. And Toronto market has seen an insane amount of appreciation. That's perhaps even the reason that some people were saying we may be entering a bubble. The reason why that is when people start purchasing properties only for the sole aspect of appreciation, if there's a market turnover, a recession, or anything changes, or if the interest rates spike up, you may be one of the people that gets caught into that, where the property now is no longer valued or appreciating. It could be even just flatline, but now you're out every month $400 to $500. Talking about this and comparing it to Airbnb, that's a very big component of this. Now, as you know, we talk a lot about Airbnb and short-term rentals on this channel. We're gonna relate real estate prices as to how they directly impact Airbnb or vice versa, how Airbnb directly is not right now impacting the real estate prices or could be impacting real estate prices. What this means is going back to this same example of the $500,000 studio could be generating on Airbnb anywhere between $4,000 to $5,000 to $6,000 on an average per month. Now, people who purchased solely for the purpose, knowing that on a long-term basis, this investment does not make any sense. However, looking at the higher revenues that they could result from short-term renting it or Airbnb-ing it and purchasing it only for that purpose will be the biggest losers in the current market, unfortunately. Now, it's always the best rule of thumb to make sure that the property makes sense on a long-term basis and then using it for short-term rental purposes to even increase the income that you would be generating. That's the best strategy in my mind going into 2020. Knowing Airbnb and short-term rentals also gives you an edge. If you're able to now purchase real estate in a space that allows you to do so legally for the long run and is perhaps a market that people love to flock into for short-term rentals or for Airbnbs, will be the winners in the long term. I'm currently in the midst of actually purchasing a property for short-term rental purposes with a very good friend of mine. I'll create another video in which we actually maybe give you a walkthrough and I walk you through as to why that's a good deal. Now, if you're focusing when purchasing a property, regardless of what market you're in, whether you're in a recession, whether you're pre-recession, if the property makes good cash flow sense, it's most likely a good investment property. I'm not halting all my purchases just because there may be a possible downturn in the market. And yes, I agree, that's a very possible situation. Let's talk about that for a second. What happens in the real estate market when a recession hits? Now, as items are already priced to perfection, people were making bad purchases, perhaps possibly because of Airbnbs, or just because the appreciation has been crazy over the last couple of years and people were just trying to ride that. In other words, trying to FOMO in and try to catch that wave upwards, will probably unfortunately be caught at a very wrong time. If you just purchased or closed very recently, it's highly likely that your property price is not the same what it was just pre-pandemic. Usually real estate takes a little while for the property prices to be hit. Right now, the data already shows that the real estate sales have dropped. The prices are not quite yet impacted. What I want you to start thinking about is what happens if this pandemic lasts longer than what we had hoped for, if this vaccine doesn't come around anytime soon. Now, people who have lost their jobs, if they're unable to go back to their positions, if they're unable to go back to their jobs, or if businesses are even realizing that they're so good at working from home, they don't need physical real estate or large offices for people to sit in, what happens is, as people are losing their jobs or as businesses are no longer interested in real estate, over time, the properties that are listed that haven't yet moved will realize that supply is increasing on the market and the demand perhaps maybe is not there. So people who will be listed for 3 to 6 months or 7 months and 8 months will start reducing their prices, which means that we're going to start seeing lower real estate prices. Now, lower interest rates is going to try to combat that, to continue people from purchasing. So this will be very specific on city to city or country to country. Us in Canada, I believe, have a very good banking and mortgage system. We're not giving mortgages out very easily. If anybody who owns a mortgage or properties in Canada knows how difficult it is to actually apply and be approved for one. So we're not like the 2008 and 2009 crisis back that happened in the US, because we're a stronger market. Our banks are very resilient in giving mortgages out. However, if this thing lasts for a very long time and people are jobless, that means that your tenants can't pay you or people can't afford to purchase because of that. You can't qualify for a mortgage if you're out of a job. This could result in lower prices over time. At the same time, it's very important to look at some of the other factors. In Canada, immigration's been increasing year over year. Now, we continue having a very low supply of housing. So if it continues this way, those are some of the indicators that will push on the other side. If people do not default on their mortgages, if the supply remains low, we will not perhaps see as big of an impact as some people are predicting into the real estate market. At the end of the day, if the property still makes sense, if it's a very good investment property, if it cash flows very heavily, now would be a great time to buy. Especially if you're seeing property prices coming down, it could be a great time if you're a first-time investor to step into the market. Just wait to see if things are stabilizing a little bit. If you're finding anybody who's a distressed seller, if you're finding foreclosures, now would be a great time to pick up a good real estate investment. And I'm actively looking to see if there's any good opportunities in the market. Now, as I mentioned, I'm an investor and I do time and time again look for properties from a short-term rental or an Airbnb aspect. Now, if I'm purchasing a property that is in a Airbnb or short-term rental legal space, this is a great benefit. I think people got exposed to seeing how much money they could make on the short-term rental or Airbnb market. Now, what happens is if the regular cities, the more urban cities become more strict in allowing people, if there's licensing, all that sort of stuff, and there's restrictions, like a lot of cities have been putting restrictions, you can only Airbnb your space if it's a residential property, if it's your first home, you can only do it for 3 months or 6 months. If these type of rules do come in large into a lot of different cities, places that actually allow you to legally do short-term rentals will be very, very beneficial. Anybody who's an investor will be flocking towards those markets because of how much income can be generated from these short-term rental properties. I'm always looking from this investor lens to see what markets I can actually enter that allow me to do so legally, do have a property appreciation, allow me to still get a mortgage so that I can use leverage, I believe personally people and investors will flock even more so in the future towards properties like this, as they see that bigger cities may be restricting and coming down hard on short-term rental legalization and rules. Now, for anybody who uses rental arbitrage, now could be a very good opportunity as rents are coming lower and lower by the day. I've been able to negotiate my existing rental arbitrage rents to a lower because the market rent is now indeed lower. To give you a specific example, I have a property that regularly used to rent for about $3,600. I already had a good below market rent at $3,400. Right now is actually renting for $3,200 because the supply is higher. So I'm going back and renegotiating with my landlords to see if we can continue having a great relationship and work on those rents just a little bit more to make sure that we're still with the market rents, and indeed in return allows me to be more profitable, especially when this thing blows over, market returns to the normal. If I can continue getting those higher average daily rates that were in the past, I will be even more profitable than before. So people are frowning upon rental arbitrage. Listen, right now a lot of businesses are in trouble. Not just Airbnb or tourism or hotels in specific, restaurants, cruise lines. A lot of businesses are actually highly impacted due to the pandemic. So this is just a temporary blip. Tourism is a very, very resilient industry. It's always bounced back. And of course it will even through this. If you want to know how to continue to stay profitable under the current market scenario, you can go and look at some of our other Airbnb and short-term rental videos in which we cover this in great detail. Please go smash that like button. It costs you absolutely nothing, but I'd be very appreciative. It allows this video to be amongst more eyes. And if you're new to our channel, The Traveling Host, go subscribe, hit that bell icon, and every single time we create one of these videos, you'll be notified. Now let's discuss stocks. Stocks seems to be the hot topic right now. Everything I've noticed in my career, every single thing has its ups and downs. I believe just about 2 years ago, cryptocurrency was the new hot topic. You'd see all the social media gurus, all the influencers, tons of ads talking about cryptocurrency because it was a new hot topic. I was also one of the unfortunate people that gave into the FOMO. I was just getting exposed to cryptocurrency and I ended up buying at some of the highs in 2016 and 2017. Since then, I've gone back, really looked at the blockchain to understand it, and now I'm a long-term investor in cryptocurrency, which we'll talk about next. But coming back to stocks, everybody seems to be talking about stocks right now because there's so many ups and downs in the market. Just the volatility itself is causing a lot of day traders, a lot of option traders to continuously be in your social media across ads and just telling you to maybe perhaps purchase one of their courses right now. I'm going to tell you, please do not purchase one of those courses. Be a savvy investor. Do not give into the FOMO. And again, I'm sure you may have also heard time and time again, one of the Warren Buffett's very popular quote saying, when everybody's being greedy, it's time to be fearful. And when everybody's being fearful, it's time to be greedy. What this means is right now, there's a lot of stocks that have been way, way lower than their all-time highs in 2019. Those all-time highs were absolutely inflated. If you've been able to follow any good economists, they've been saying that the 7 to 9 year recession cycle is long overdue and the markets and stocks were at all-time highs. Now, what I want you to do is go back and not start FOMOing into any and every stock. If you're trying to purchase perhaps maybe something in the tourism industry, it's a possibility that the stocks may see another dip, another low, just because nobody knows right now how long this pandemic will last. There's a lot of uncertainty out there. What I would highly advise you, if you're new, if you're a beginner, if you're an introductory or an intermediate stock investor, to go back and learn the fundamentals. Try to understand as to what the company does, what the team of the company does, who the CEO is, what the product's all about. If it's a product that you personally like using and you seeing to grow into the future, those are the type of companies that you want to invest in. Secondly, use something, and I want to emphasize this, called dollar cost averaging. This is basically you trying to invest your $100 in iterations. So let's say you have $100 to invest into the stock market. And let's say you want to purchase a stock that costs $10. Now, what you want to do is purchase in iterations. Set yourself up some guidelines. Let's say you think that this thing will last for 6 months or a year. You only have the $100 to invest. You will invest once every month or once every 2 months or once every week, however you want to really break this down. The point of this is, let's take Apple as an example. It was an all-time high of 300 and something bucks. When it dipped, it started dipping. Maybe you invested somewhere in March 2nd or March 3rd. Let's say at that time you purchased the stock at $280. It kept going down. You purchased it on March 18th when it was at its complete lowest. You purchased it once then. 2 weeks later, you purchased it a little higher. And today, as we speak, I believe the stock is at $304, but you caught it at all the different iterations. This means you didn't catch it at its peak. You didn't catch it at its lowest, but through dollar cost averaging, you were able to catch it as it was going lower or as it was climbing back up to make the cost of your purchases somewhere of an average. As some of these stocks are at a great discount, you should really be looking at some of these companies that you believe in for the long-term growth and start investing. Last but not least, cryptocurrency. I would highly advise you to look into understanding what blockchain is. Don't do what I did back 2-3 years ago when I FOMO'd in. You should really try to understand what the cryptocurrency is doing, what the cause of it is, and if you believe it or not. And if you're a new investor, you should be putting a very, very, very small portion of your portfolio in it because it's a highly volatile. The upside can be extreme, but so can be the downside. So do your thorough analysis, and I would say at the very least, anywhere between 1 to 5% of your total portfolio should be invested into cryptocurrency after you really understand that, because the upside could be so much more. Please go smash that like button. Costs you absolutely nothing, but I really appreciate it, and also allows us to get this video across more eyes.